Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq, with daily insight on the Nasdaq-100 index, or the NDX, which is made up of 100 of the largest domestic and international non-financial innovative companies listed right here on the Nasdaq stock market. The NDX has been the barometer for U.S. large cap growth and also one of the best performing indexes over the last decade and a half, not to mention one of the most liquid index ecosystems in the world. Joining me this afternoon, we have Ryan McCormack. He's QQQ equity ETF strategist at Invesco to discuss weekly trends in the Nasdaq-100. And Ryan, it was quite a week for the index with earnings and continuing to hit new all-time highs.
Yeah, it sure was, Jill. Thanks for having me on. Another great week for QQQ. Outperformed the broader S&P by over 2.5%. On the back of earnings. Now, as you're looking broadly across the marketplace, it looks like equities continue to climb the wall of worry, kind of on the back of hopes for a vaccine or COVID treatment, and on the back of renewed hopes for additional stimulus. But in any case, it certainly seems to be serving QQQ pretty well.
All right, let's take a look at sector performance. What's leading the way?
Yeah, so unsurprisingly, you're seeing information technology, consumer discretionary, and communication services yet again, sitting there kind of driving the bus. And I think you're looking at those three sectors. They're the three that have really propelled this 24% outperformance year to date relative to the S&P. A good example here, you see financials sneaking in as being a positive contributor to QQQ, and that's because of our lack of exposure. So you can see the sector was under pressure over the past week, thanks to QQQ's underweight to the sector. That helped out as well in terms of relative performance against the S&P.
All right, we had a lot of big names report last week, but of course, Apple, Amazon, and Facebook, the quarters were pretty fantastic for Apple and Amazon for sure.
Quarters are absolutely fantastic, and it was sort of the icing on the cake for July. They all three companies reported after the close on July 30th, and all kind of reference some of the challenges that COVID brought, but also it sort of leans into why their businesses are doing so well. You look at Amazon, an unbelievable over $5.6 billion worth of profit. I mean, the analyst expectation was for $665 million. And that's in the face of them spending $4 billion on cleaning, on upgrading, one-time employee bonuses, significant amounts of new hiring. The company just had an absolutely unbelievable quarter. If you look at something like Apple, same thing, right? Beat expectations. They talked about the growth of iPad and iMac as you're seeing this work from home and school from home. People are looking to upgrade that experience, and you're seeing that renewed interest in the iMac and iPad. Apple even talked about the launch of the new iPhone being pushed out a few weeks, and investors largely shrugged it off with nearly 10.5% of positive performance in that following trading session. And again, Facebook, very similar, talked about the challenges of COVID, but also looked at 12% increases in daily and monthly active users on the site, also showing earnings that beat analyst expectations. So three of QQQ heavyweights certainly provided an exclamation point for the last day of July.
As we say, Ryan, our modern day industrials. Thanks as always for joining us on Trade Talks.
Thanks, Jill.
And thanks for joining me. I'm Jill Malandrino, global markets reporter at Nasdaq.